where all of that is going. Is it a sort of funny sideshow, or is it legitimate and scary for banks? I know with the Brexit news, the price of Bitcoin popped, and so I don't know. What do you guys think about it now? Where's it going? Should we pay attention to it?
Yeah, I might start off on that.
Yeah,
I might start off on that. So it's definitely not a funny sideshow when it comes to blockchain and what's going on and that underlying technology. And it's funny to see the early stages of blockchain and Bitcoin and what was happening there. You know, if you think about it, Bitcoin, the early stages, pornography, drugs, there was fear around what the hell this was all about. But actually where it's ended up is that underlying technology of blockchain and what that's enabling. And what it really does is it provides security, it provides trust, it provides an immutable transaction. And that's the thing that we discovered. So we were one of the first banks around to roll up a proof of concept on blockchain. We used it for global markets, and what was really key about it was, how will this work to make it easier for our customers? How will it work to make it easier for us to interrogate a transaction?
How does it make it easier?
So what it does is it takes basically a huge amount of data and a huge amount of systems that are talking to each other and actually provides a very simple customer-facing platform. And in essence now, what you can do with that then, it means customer, the bank, and even a regulator can interrogate those transactions better. Now, are we going to roll that out tomorrow? Absolutely not. Blockchain is at that stage. It's the early stages of the internet. This is exploration. I think there was one of those lines that was used yesterday by one of the speakers, which I loved, was that whole idea of curiosity. If you're in an innovation function in a bank, you've got to have curiosity. You've got to be exploring and experimenting with these technologies. We are very early stage in blockchain. I think every business would say that. And there are some phenomenal startups who are doing great things in blockchain, but it is that early stage now of the experimentation. But it has huge potential. Health records, financial services, identity, really, really strong potential. So it's definitely not a sideshow.
Is there a potential for a post-bank world?
There is still a large population. I was talking about 30 million customers, 12 million use online, but there is still a population that don't use online. And when we survey them, you know, like they express their fear sometimes to use online, like, is it right? Am I not going to make a payment this way? And we are really thinking hard about how can we offer an inclusive proposition for banking. So maybe that's the way you want to do it, but other customers maybe have a different way to do it. And as part of, like, when you look at our customer base, which is very diverse, it's about offering something, so it's about offering proposition and services that could fit everybody.
So I think it is unlikely that there is going to be a completely post-bank world. But there is one regulatory, or at least policy move that I think is worth being aware of, which is there's a new directive called the Payment Services Directive 2, which is coming into effect in really quite a short period of time in Europe. And that basically forces the banks to open up their infrastructure to pretty much anybody through open APIs to be able to start to offer services on the top of it. Forgive me if I've got the details wrong. But in Europe. And so the risk for banks here is that the banks become reduced to a utility and become a commodity platform that other people come in and deliver services on top of, and they generate the customer experience and the customer value, and this layer, the banking infrastructure layer, becomes commoditized. And I think there's a huge risk to banks there in terms of the value that they would be able to generate in that kind of environment, unless they take it on the front foot and they really work with people to figure out how they can also be adding value to customers and delivering new services in new ways.
I think Hazel has really nailed it there, that piece around Payment Service Directive 2. It is a piece that you can either look at it in, and I think many banks will look at it in a way that says this is a piece of regulation and we need to comply with it and so on, and it has fundamental impacts on what you do as a bank. Or you can look at it as an opportunity and you can say, actually, this really puts us into a space where our API layer and how we engage with fintech is a priority for us. And that's what becomes really, really important. So part of what we're trying to do is to take those early steps, is to make sure that we're on that curve.
I think just to make it very concrete, PSD2 is two things. There is one thing, which is it enables any company, third parties that will be accredited, to initiate a payment transfer in the bank rails. So for example, Facebook could get an accreditation and transfer money using the payment infrastructure of the banks, and enable a second thing, which is downloading part of your current account transaction that then could be, for example, a use case is it could be either aggregated for research purpose or either used in order to for a personal financial management tool that then could be there. In the UK, we work with a so above PSD2, we work with the government and the regulator, and I was at the steering group on a concept that is called open banking, which is basically enabling customers to access their data at any point in time and share it in certain boundaries and regulation with other companies. This enables what we call the API economy, which is used by Salesforce and other tech giants for a long time. This goes with a certain amount of regulation because obviously your data is private and we need to understand, like exactly where the data is going, so companies need to be accredited. And that's something that is, forward-thinking in terms of what could happen in the financial services of tomorrow, which means that it's not restricted to payment or your current account, but could also be your loan, your mortgages, and the different area. I will just say, for me, what is important is always the same thing, is the customer adoption at the end of it. So there is a lot of opportunities for innovation. Our point of view is, we work with the startups and we really support them, not necessarily to acquire them, but also to help them grow, as you can have seen in Startup Bootcamp, because a favorable ecosystem of innovation sets the bar for the customer experience and therefore is beneficial for our customer. But at the same time, we also listen to what do they need in a daily basis, and what do they need at the moment is a great mobile banking app that enables it to do on the go, something that is resilient and secure, an answer for the people that maybe are not online and are looking for this question. And I think there is a lot of innovations that have to be done there. We ran a survey in 1 million of our customers for the first time this year, and what we find out is customers that have a low digital capability and a low financial capability are missing out by not being online, £744 of saving per year. And this is a huge opportunity. And innovation is also, by just not being online, not necessarily banking, but not being online. And I think these are also huge opportunity, and innovation also have a role to play there.
Just to sort of very briefly talk about some of the specific startups and sort of specific interventions that are happening. There's SoFi and Lending Club, which are startup loan companies. How seriously do you take those? Is that?
So alternative lending, we touched on earlier today in a lot of the speeches, this whole concept of the sharing economy and where it's going. And of course, there's absolutely a value in what they're doing. There's absolutely a real credible value for businesses, for consumers, etc., to access those funds. We've seen it in Ireland, and we have two crowdfunders here, Grid and Link Finance, really, really good, and a great customer experience as well. The one that excites me a lot is one that we're involved with, that we've engaged with, is a company called Fundit. And Fundit is basically a kind of a arts community where they get together and crowdfund, and you're putting funds onto that platform and funding out these. We've had things like Fight Like Apes funded through the platform, their new album. We've had games, we've had, you name it, art side of things. And those platforms are actually changing the way we think about money and the way we can access money as well.
Do you think one of these startups, more than just sort of like a Kickstarter or more than just funding a project, do you think that people would feel comfortable getting like a mortgage through a startup?
I think this is exactly where we fall into that story of the fintech 2.0, and this is that story of the rebundling. So to do that, I think there's certain things that people will expect from any business, and that's things like trust and security. And security comes down to this so importantly. So when you engage with some of those fintechs, I think that's the point where you're using shared assets. Yeah. You're working together and saying, well, we can provide some of that, an alternative on your side, you can provide the UX that possibly is something we're not able to deliver at the moment. So by using that together, you start to bring that together. So do I think a mortgage crowdfunded? Well, absolutely it can be. The point being is the trust and security needs to be part of that.
The thing about the crowdfunding platforms is that there are, I think Dave's absolutely right, there are some areas where you can raise money from the crowd that money just was never previously available before. So for arts projects, for example, where a lot of arts is funded by the government and governments are cutting back, but there are people that are passionately interested in art, so you can really kind of mobilize a philanthropic angle there and a totally new opportunity for funding arts. There's the other side of the crowdfunding platforms as well, which is there's a savings opportunity for people to potentially generate a better return on their savings, or to diversify as well, because typically they are, for example, if you're a saver into a crowdfunding platform, you're going to get a better rate of interest than you are through putting your money to work in the banks. So there are benefits on both sides, and I think it's absolutely around horses for courses. It's fitting the opportunity to the specific need of the customer, and then making sure that you've got the right infrastructure in place, that you've got the right security behind it. A lot of these lending platforms are talking about the fact that they have better credit scoring algorithms, that they have easier ways to assess the risk, or to slice and dice the risk, and therefore to offer the savers a differentiated proposition according to how much risk they're prepared to take. So it gets quite sophisticated, but I think the net result for all of us is that it diversifies options. And it means that you don't only have to go to venture capital, you don't only have to go to the bank. You can look at what are the other options out there, and that choice can only be a good thing.
Enjoy this video from Inspirefest, then click on the link to get your hands on ultra early bird tickets for Inspirefest 2017, and make sure you're in the audience for this exciting international event.